Hello and welcome to Investment Insight, your clean take on the markets. Let's get started. Today we're unpacking a really bizarre split screen in the global economy. It's early 2026, and we're looking at two massive stories that seem, totally contradictory.
They really do. But when you dig in, you see they're actually two sides of the same coin. It's a fascinating moment.
So on one side, you have the underground economy, and it is just booming.
Absolutely booming. We're talking a record-breaking year for financial crime, specifically money laundering. And then on the other side of the screen,
The retail investor, the regular folks, maybe you listening right now.
and they are completely rewriting the playbook on how to invest.
Yeah.
And they're doing it because the assets that used to be rebellious and exciting are now seen as, well, boring.
Boring. That is the word of the day. We are going to talk about why Bitcoin is suddenly being called old school.
Yeah. And why it's getting lumped in with, like, treasury bonds?
Yeah. But before we get to the bored investors, we have to talk about the criminals. Because the numbers here, they're just hard to wrap your head around. We're looking at recent data from Chainalysis and Reuters, and they're reporting that illicit funds washed through crypto in 2025 hit an all-time high.
It did. And the number is $820 billion.
$820 billion with a B.
With a B.
That is just staggering. For our listeners, that's roughly the GDP of what, Switzerland? Turkey?
It's huge. Imagine the entire economic output of a major country, but it's all dirty money in a digital washing machine.
And the growth rate is what's really scary here.
Oh, absolutely. That's what scares regulators. If you look back just 5 years to 2020, that number was around $10 billion.
So what is that, an 8,000% increase?
Something like that. It's an
Yeah.
explosion. But, what's more important than the raw number is how it's happening. This isn't just random bad guys in a basement anymore.
Right, and this is the part that blew my mind in the research notes. It's become an industry. It's professional. They're calling it laundering as a service.
Exactly. That is the key insight. Think of it like a food delivery app.
Like an Uber Eats or DoorDash.
Precisely. You don't cook the food, you don't drive the car to pick it up. You just open an app, you click a button, pay a small fee, and the service handles all the logistics. You outsource the work.
And the criminal world has done the same thing. The scammers aren't the ones washing the money anymore.
No, they outsource it. You focus on what you're good at, the theft, and you pay someone else to handle the finance. You hire what the researchers are calling CMLNs.
Chinese money laundering networks.
Yes. These are sophisticated groups that handle the dirty work for a fee. And the data shows these networks are processing about $40 million every single day.
That's wild. It's like the corporate structure of a logistics firm, but for crime. But where does this happen? Is this, the dark web?
Surprisingly, no.
Mm.
And this is where the tech aspect is so interesting. A lot of this infrastructure is it's built on Telegram.
Telegram, the messaging app. I use that to chat with friends.
The very same. Now, obviously, it has millions of legitimate users, but because of its encryption and its features, these networks have built what they call a guarantee ecosystem right there inside the app.
Okay, unpack that term for me. Guarantee ecosystem.
Okay.
It sounds like something you get with a toaster.
It's essentially a dark version of eBay or Amazon Marketplace. Imagine you're a scammer, right? You have dirty crypto, you need clean cash.
Okay.
You don't trust the launderer, and they definitely don't trust you. So these Telegram groups, they act as an escrow service, a middleman.
So the platform holds the money to make sure no one rips off the other criminal.
Precisely. It connects the two sides. They offer customer support. They have trust ratings, literally star ratings like a rideshare
No,
app.
wait, they have customer support. That's so modern. Hello, I'd like to report a problem with my money laundering transaction.
It's a full-service industry. The research points to specific markets like the Jinbi and Huoni groups.
Mm-hmm.
And we have to talk about where this money comes from, because a huge chunk of that $800 billion is from pig butchering scams.
Ah, right. We've heard this term a lot. It's a terrible name for a terrible crime.
The visceral term. It comes from the Chinese phrase sha zhu pan. It's a long con romance scam. The scammers spend months fattening the pig, so to speak.
Building trust, affection, promising a future.
Exactly. And then they convince the victim to invest their life savings into a fake crypto platform. Once the money is sent, they butcher the pig, they ghost the victim and steal everything.
It's horrific. And these Telegram networks, they're the back end. They're the machinery that cleans all that stolen money.
They take that traceable money and they wash it, swap it, disperse it so it vanishes.
Okay, but I still have the question I think a lot of our listeners have. Why crypto? If the blockchain is a public ledger where everyone can see the transactions, isn't that the last place a criminal would want to be?
That's a really common misconception. In 2026, it's not really about anonymity anymore.
It's about utility.
Exactly. It's about speed and cost. Crypto is, simply put, the cheapest and fastest global payment rail that exists.
So it's just a business efficiency decision?
100%. Think about the last time you sent a wire transfer. You go to the bank, you fill out forms, pay a $30 fee.
And if it's after 2 p.m. on a Friday, forget it. The money won't move until Monday. It's a nightmare.
It's stuck in the 70s.
Yeah.
Now imagine you're a criminal trying to move $10 million from Kansas to Southeast Asia. Using the banking system takes days, costs a fortune, raises a million red flags.
Not with stable coins.
It's instant. It settles in seconds. For pennies, they're using it because it's superior technology for moving value.
Which makes a disturbing amount of sense. But surely the government is onto this. I mean, $800 billion isn't flying under the radar.
No, it is not. And that brings us to the government's response, which has gotten very aggressive. The strategy has changed. For years, it was like playing whack-a-mole.
Right, you arrest one scammer, 2 more pop up.
Exactly. So now, they're not just chasing the thieves. They're trying to break the roads the criminals drive on. They're attacking the infrastructure itself.
So instead of catching the speeding car, they're just blowing up the bridge.
Perfect analogy. The Treasury Department is using really powerful tools, like Section 311 of the Patriot Act. This lets them basically designate an entire network as a primary money laundering concern.
And what does that do, practically speaking?
It cuts them off. It blockades them from the U.S. dollar system. No bank in the world that wants to do business with the U.S. can touch them. And given the current administration's focus on national security, these tools are being used a lot more.
I also saw in the notes that AI plays a role here.
It's become an arms race.
Yep.
Criminals use AI for deepfakes, for writing scam scripts. But now, regulators are using AI to automate the detection of these networks. A human can't review a billion transactions, but an AI can.
So has it actually worked? Is this pressure having an impact?
It seems to be. There was a recent report on the shutdown of Guarantee.
That was one of the big Telegram marketplaces, right?
A massive one. It accumulated about $12 billion in transaction volume.
12 billion.
And
It's just gone.
Gone. It shows that when you disrupt the platform, you disrupt the trust. If criminals can't trust the guarantee system, the whole service model starts to crumble.
It's fascinating. A high-tech war in the underworld. But this brings us to the other side of the coin. While the dark side of crypto gets more sophisticated, the light side, the legitimate investing world, it's getting weirdly normal.
That's the perfect transition, because as regulations tighten on the criminal side, the legitimate side, especially Bitcoin, is evolving into something completely different.
Right. Which brings us to our second big topic, the fragmentation of the retail investor. Reports from the Financial Times and MarketWatch are saying young investors aren't leaving the market, they're just bored with Bitcoin.
Bored is exactly the right word. You have to remember, for years, Bitcoin was the rebellious asset. It was anti-establishment, volatile, exciting. But fast forward to 2026, and who owns Bitcoin?
It's not hackers anymore. It's BlackRock, it's Morgan Stanley, it's pension funds.
Exactly. It's been ETF-ified. It's inside the system now.
It's become dad rock.
Huh. That's a great analogy.
No, seriously, think about it. Led Zeppelin is a classic. Everyone respects them. But if you're 22 today, you're not going to a Led Zeppelin concert to find the cutting edge.
The kids are at a different concert. That's surprisingly accurate.
Yeah.
Bitcoin is institutionalized. It's regulated. It moves based on interest rates, not on hype. So if you're a young investor looking for that massive upside, that excitement,
Bitcoin doesn't have it anymore. It's too stable.
so the money is going elsewhere. The risk appetite hasn't vanished. It's just moved. First, you have altcoins. Young investors want what we call leveraged narratives.
Higher risk, higher reward. The lottery ticket potential.
Right. But the second area is even more interesting, and it's a bigger shift. Prediction markets.
Oh, this is stuff like Polymarket.
Yes, and it's exploding. The big news recently was Dow Jones' Honor of the Wall Street Journal partnering with Polymarket.
Wait, really? The Wall Street Journal is partnering with a crypto betting site? That feels like two different worlds colliding.
And that tells you everything about how mainstream this is getting. Here's why it matters. People aren't just betting on stock prices anymore. They're betting on events.
Like, who will win an election? Or will the Fed cut rates?
Exactly. Will there be a hurricane in Florida? Will Taylor Swift get engaged? News itself is becoming a tradable market.
It's the gamification of reality.
Precisely. For a generation that grew up online, it makes perfect sense. Why just read the news when you can bet on the outcome? It's more engaging than holding an ETF for 10 years.
And speaking of games, are meme stocks really back? I thought we left that in 2021.
History rhymes.
Mm.
In January 2026, Michael Burry, the guy from The Big Short, started buying GameStop again.
No way. He's back in GameStop. That's wild.
He is. And the point isn't that it's a good company based on fundamentals. The point is that meme stocks are a signaling mechanism. It's retail capital saying, we want risk. We are opting out of the slow, boring path.
So you've got altcoins, prediction markets, meme stocks, but they can't be putting all their money there, right?
No, and this is the twist. While they're gambling with one hand, they're being surprisingly conservative with the other. We are seeing a huge pivot toward gold.
Gold. Like physical gold bars. That feels so old school for a digital generation.
It's the barbell strategy. Extreme risk on one side, extreme safety on the other. And it's not just ETFs. Costco's selling out of gold bars.
Costco, like next to the giant bags of rice.
Yes, millions of dollars worth. The logic is, I gamble with alts, but I save with gold because I don't trust the dollar. They see Bitcoin as being too correlated to the stock market now.
So if stocks crash, Bitcoin crashes. Gold is the hedge against the whole system.
That's the thinking. And you're also seeing interest in real-world assets like farmland. Scarcity is the theme. But even there, you see the government cracking down on foreign ownership, citing national security risks.
Okay, let's zoom out. We've got an $800 billion laundering machine on one side and Bitcoin as dad rock on the other. What's the synthesis here?
The big picture is a massive bifurcation, a splitting of the crypto world.
Break that down. What are the two sides?
Side A is the dark infrastructure, the laundering networks, the telegram markets. This side is in an existential fight with government regulators and their AI.
Okay, and side B?
Side B is the legitimate market. This is where Bitcoin lives now. It's graduated. It's boring, institutional, safe. And because it's safe, the retail speculators have been forced to the fringes to find excitement, to prediction markets and altcoins.
So if you're a listener, what's the takeaway? Why does this matter?
It means crypto isn't one single bucket anymore. You can't just say, I'm investing in crypto. Bitcoin behaves like a tech stock. Altcoins behave like venture capital bets. They are completely different animals.
And the crime aspect, how does that affect a regular investor?
It creates something called compliance alpha.
Compliance alpha, I like that. What is it?
It means that as the government cracks down, the companies and exchanges that are clean and regulated are going to become much more valuable. Cleanliness is an asset. Institutions will flock to the platforms they can trust.
So it pays to be boring.
Boring is profitable.
Before we go, I want to leave the listeners with one last thought. These prediction markets, turning news into a bet, where does that lead?
It really does raise a provocative question. As AI makes it easier to create deepfakes, fake news, fake audio. And these markets let us bet on the outcome of those events. Are we moving to an economy where truth is just another asset class?
Whoa, that's a heavy thought.
Think about it. If you can make money shorting a stock based on a fake video, or bet on an election that's being manipulated, the line between what's true and what's profitable gets really blurry.
Yeah.
Are we entering a world where you can literally short the truth?
That is both terrifying and fascinating. A perfect place to end. We went from money laundering to shorting the truth.
Never a dull moment.
Thank you so much for breaking this all down. This was a deep dive I won't forget.
My pleasure.
And to everyone listening, thank you for tuning in. Don't forget to subscribe and hit that like button.